Back to my channel. So today's topic is how to spot liquidity grab and stop hunt. Now, I've done a video on internal liquidity and external liquidity, and I'll advise you to go and watch it on the channel. I'll try and put a link end of this video on how to find or how to find the class. Kindly watch this video to the end. I hope you gain value for your time also. So internal liquidity is more of our order block, liquidity void, and our fair value gap. External liquidity is the old highs and old lows and equal lows and equal highs. Now, why I put in this arrow is because it involves also a buy side liquidity and sell side liquidity. Now, I'm going to show you this for those who are very new and are always confused. And people say buy side liquidity and sell side liquidity, and you are like, okay, what do they mean? It's something that you know it, but you don't know that you know it. Let me show you. Now, we have market as higher high, higher low, higher high, higher low, higher high. You can see that, right? This spot was seen under here. The higher high here is what they call, in case it's a buy scenario, we call it a buy side liquidity, while the higher low is called sell side liquidity. That is why when market is doing like this, they will tell you, oh, market has taken the buy side liquidity, meaning market has broken structure. When market takes out this liquidity, they always come back to the internal liquidity. It's like a rule. Anytime market takes out the external liquidity, that's all this liquidity is here. They call it They call it also old lows and old highs, like the old highs. Anytime market takes out all this liquidity, it always come back for internal liquidity, in the sense that this is called old lows. This down here is called old lows. This is called old lows. And if it's a sell scenario, lower low, lower high, lower low, lower high, lower low, this is called old highs. Can you see that? This is called old highs, and this is called what they call sell side liquidity. I'd have typed it here if I had known. Sell side liquidity. Now, anytime market takes out the old highs, these are old high, these are old high here. For this is for what? This is for a sell scenario, and this is an old low for a buy scenario. This is a buy side liquidity also. When market takes out buy side liquidity, comes back in for internally, that's external liquidity being taken out, internal liquidity is coming into taking internal liquidity the same way. But how do I want to explain this? Anytime market takes out the old lows or the old highs, if you go and look very very well, there must be a form of order block or fair value gap that will be outside, that market must surely grab as an internal liquidity to push it down. Example, I want to show you an example now. You can see here now what happened here. There was a break of structure here, right, making this below become an old low. And when this old low was taken as a form of liquidity, what is market coming to do here? Market will react here. Even though I haven't done total analysis, market will react there. Do you see? Except market wants to change trend. I haven't done a back testing on this strategy. Liquidity also being taken here. Let me do it very very well for you. Let's see. Okay, what, I didn't check the trend of this market. Let me see the trend. Okay, it's an uptrend. Let me find you a good method to show you how it works. Okay, let me show you this situation here. Now you see what happened here. There was a break of structure. Can you see this here? There was a break of structure. It is a rule that has helped me, and it changed my trading entirely. When I'm analyzing, I always ring it in my brain. External liquidity has been taken, internal liquidity comes from internal liquidity. Now this is a liquidity up here that has been taken out. Old high has been taken out. Old high has been taken out. Market always comes back for inner structure. Market always come out for inner liquidity. Do you see? If you go around your chart and find it, find where you have an impulse form of liquidity. You can see here a liquidity here. Market came in here, could not, there was no form of order block being filled out here. And what happened? This I'm trying to explain it. I'm trying to explain it in a way you understand it in a more simpler way. You can see where there was a sweep in market structure here as an old low. See, break of structure. I hope this video is not confusing for you. If it's confusing, message me in the comment section. I'll re-explain it again in another video. There was a break of structure here. An old low was being taken. It came in here. It grabbed liquidity here also. Don't forget the video I also did on liquidity. How to know when liquidity wants to be created, your Fibonacci from the high to the low. It grabbed liquidity here, grabbed, what are you seeing here? An impulse move down. Let me find that one for you. You can see here also there was what? Liquidity grab. If you put your line very well, you can see there was a liquidity grab. Markets grabbed liquidity from here, and what can I see here? An impulse move. Let me keep looking for you to find you good liquidity. Anytime you see a form of liquidity grab, market is going down. Liquidity grab here. Let me see if another one for you. Or sometimes you might see it in a form of diagram like this. How I describe it in the way you understand it now. You might see it in a form of diagram like higher high, higher low, higher high, higher high, then do one small one again, then come up again and move up. The market just come and take it in liquidity form and move out. An old low was taken out here. I'm sure you've seen something like this, whereby you have to put in your break of structure here, but also you'll be seeing one small internal structure here, and you think the market has changed structure. Then you try to make here your order block, and it is not going to hold, and you'll be wondering why it's not holding. There was a form of liquidity being taken in as an old low, like an inducement, like an old low, and an impulse move was done out. That's what you'll be looking for, old lows inside those structures. You keep finding it in for a liquidity grab to be taking place. You can see it here. There was a grab here of liquidity here, liquidity impulse move here, and the trend went up. Let's keep finding liquidity. Well, if you go around the whole chart and practice it, old lows and old highs, it's more of the old lows, higher high, higher low, higher low. The more of the old lows and old highs. And when market grabs those liquidity, market always come back with an impulse move. There's a break of structure here. You can see it, right? And what happened? Do you see there was a grab of liquidity here, an old high, and markets pulled down back. You can see it, right? An old high. And what after the old high, what did we see here? We have a form of order block here, around here, and markets pulled down to take out under external liquidity under. I don't know if this video is explanatory enough for you to understand it, but it's a summary of old highs and old lows. And if you know how to use it very, very well, it will change how you see the chart and how you analyze the chart. Knowing where market is old, you can use it in form of your entry. You can use the form of your stop loss. You know where to target your stop loss. And I hope this video was helpful. Don't forget to subscribe. Ask your question in the comment section, and I will reply all questions being asked. And thumbs up to you all.